Hello, to introduce myself. I am here as a moderator and voice actor for our group assignment accounting cycle.
Start learning accounting system. Let's get to know accounting system better with us. Here, we would like to discuss the meaning, objectives, examples, and also work together on questions related to the accounting cycle.
What we learned today is 1. Completing the accounting system. Include flow of accounting information and how the accounting cycle works. 2. Financial statement or financial report. Include all example of the financial statement. 3. Closing entries. Recording a closing entry. And last, we discuss about several questions that can be used as lessons for all of us accounting system. Subject matter, learn together, regarding the basic accounting cycle. Agenda 1. Introduction. 2. Completing the accounting system. 3. Financial statement. 4. Closing entries.
Our group. These are the members of Group 4 who participated in making the accounting cycle animation video material. Let's start with first agenda today. Hope you enjoy our presentation.
Feni Cindy Aulia, Script Coordinator, Nasiwa Nisrina, N. Editing Coordinator, Nazla Naufila, HKI Coordinator, Kaka Febri Andana, Voice Actor Coordinator, Tarisha Dewi, A. Chief Coordinator. Accounting System. What is the accounting cycle? The accounting cycle is a collective process of identifying, analyzing, and recording the accounting events of a company. It is a standard 8-step process that begins when a transaction occurs and ends with its inclusion in the financial statements and the closing of the books. The key steps in the 8-step accounting cycle include recording journal entries, posting to the general ledger, calculating trial balances, making adjusting entries, and creating financial statements.
Step 1. Transactions are analyzed and recorded in the journal. Step 2 and Step 3. Transactions are posted to the ledge. An unadjusted trial balance is prepared. Step 4 and Step 5. Adjustment data are assembled and analyzed. An optional end-of-period spreadsheet, worksheet, is prepared. Step 6 and 7. Adjusting entries are journalized and posted to the ledger. An adjusted trial balance is prepared. Step 8 and Step 9. Financial statements are prepared. Closing entries are journalized and posted to the ledger. Step 10. A post-closing trial balance is prepared.
Flow of accounting information. Account balances are listed in the unadjusted trial balance columns using the ending balances found in the general ledger. Adjustments are entered here. 2 possibilities. Deferrals, existing balances are changed. Accruals, new information is entered. Adjustments are added to or subtracted from the amounts in the unadjusted trial balance columns. Account balances are now adjusted. Amounts for revenues and expenses in the adjusted trial balance columns are extended to the income statement columns. How the accounting cycle works. The accounting cycle is a methodical set of rules that can help ensure the accuracy and conformity of financial statements. Computerized accounting systems and the uniform process of the accounting cycle have helped to reduce mathematical errors. I will provide an overview regarding the flow of accounting information, or what we usually call an end-of-period spreadsheet. Let me show you flow of accounting information. The amounts for assets, liabilities, owner's capital, and drawing in the adjusted trial balance columns are extended to the balance sheet columns. Financial statement. What is financial statements? Financial statements, or financial reports, are formal records of the financial activities and position of a business, person, or other entity. And now we will discuss what examples of financial statements are.
The financial statements are used by investors, market analysts, and creditors to evaluate a company's financial health and earnings potential. The 3 major financial statement reports are the balance sheet, income statement, and statement of cash flows.
Example of income statement, balance sheet, asset, liabilities, owner, Quitey, income statement, revenue and expense.
Closing entries. A closing entry is a journal entry made at the end of accounting periods that involves shifting data from temporary accounts on the income statement to permanent accounts on the balance sheet. Temporary accounts include revenue, expenses, and dividends, and these accounts must be closed at the end of the accounting year.
Recording a closing entry. There is an established sequence of journal entries that encompass the entire closing procedure.
First, all revenue accounts are transferred to income summary. This is done through a journal entry debiting all revenue accounts and crediting income summary. Next, the same process is performed for expenses. All expenses are closed out by crediting the expense accounts and debiting income summary. Third, the income summary account is closed and credited to retained earnings. Finally, if a dividend was paid out, the balance is transferred from the dividends account to retained earnings. I will give examples of several questions that can be used as lessons for all of use. The following questions are in accordance with what we discussed. Are you ready? Let's get started. Question number 1 in the income statement section of the end of period balance sheet for PT, bahan pinggir, for the current year, the debit section amount is IDR 53,000 and the credit site amount is IDR 60,500 before the amount of net profit or net loss is included. On the income statement from the end of period working paper, what is the profit and loss amount? The answer is profit and loss calculation. Sheer income, expenses, IDR 60,500, IDR 53,000, IDR 7,500. What is the flow of accounting cycle in a service company? The answer is the accounting cycle of a service company consists of posting to the ledger, preparing a trial balance, preparing an adjusting journal, preparing working papers or a balance sheet, preparing financial statements, and preparing a closing journal. And here are some questions that you can work on so that the material remains consistent with what we have discussed today. 1. What is the 6th step of the accounting cycle? 2. What are the accounting measures discussed in this material? 3. How important is the accounting cycle in company financial recording?
Thank you for your attention. See you soon.